You know, there was a time where the young people of our country would go to a party and we as parents would be concerned about whether they were smoking weed or drinking alcohol underage. Now what's happening at these parties is people are passing around pills. And these are pills that these kids may think are Adderall or Xanax, and they're laced with fentanyl. Now I say this and talk about—
Put it all on the table?
The answer is absolutely, you have to. I mean, it's one of the things that my, the political advisors say to me is, whoa, don't touch that third. Look.
Folks, some lawmakers in Congress warned that Republicans and Democrats may not be able to reach an agreement on President Biden's new infrastructure package anytime soon. Many states are getting ready to pass out additional financial relief to their residents. And this is awesome news, everybody. Now, if you guys support a $200 increase in your Social Security benefits, and of course, a fourth $2,000 a month stimulus check, then let's get this video to 1,000 likes. And everybody, subscribe to my channel and share this video with your friends and family, because on this channel, I will always provide you with the most up-to-date and reliable stimulus check news.
Growth, just more debt. And that puts middle-class programs that they rely on and they've worked for at real risk. Paul Ryan was correct. When he did the tax code, what's the first thing he decided we had to go after? Social Security and Medicare.
Republican lawmakers in the Senate said there are vast differences between them and senior White House officials over how much to spend on a new infrastructure package and how to pay for it, leaving little hope of a bipartisan deal anytime soon. A spokeswoman for one of the lead GOP negotiators said that a White House counteroffer proposed during a Friday afternoon conference call with Republican lawmakers was well above the range of what can pass Congress with bipartisan support. White House officials just presented a $1.7 trillion infrastructure spending plan to Senate Republicans, which represents a $550 billion reduction to President Biden's $2.25 trillion American Jobs Plan. And the offer fell flat with many Republicans. Everybody, the 10 Republicans who negotiated with Biden early this year on relief said that Biden initially seemed receptive to their ideas during an Oval Office meeting, but that White House advisors, including the White House Chief of Staff, Democratic Senator Ed Markey, a prominent progressive in Congress, pounced on a lack of progress at Friday's meeting to call on Democratic leaders to move forward quickly with a large infrastructure bill that would need special protection under the budget reconciliation process to bypass a GOP filibuster. Markey said in a statement, "Now is the time to go big, to go bold, and to go fast. This is not a time for half measures, half spending, or foot dragging. Let's not waste time training the necessary scope and scale of this critical infrastructure package. For congressional Republican votes that have yet to and will never materialize, some progressives and liberal groups are urging the White House to abandon talks and proceed with only Democratic support on infrastructure proposals, that they would address their economic and environmental priorities. Everybody, do you agree that Republicans should pass President Biden's new stimulus bill? Tell me your thoughts on this, everybody, in the comments below. Now, though there are some signs that the US economy is lifting, millions of Americans are still facing serious economic strains from the crisis, including the risk that they'll lose the roofs over their heads. To help, President Biden's $1.9 trillion stimulus relief package set aside billions of dollars for states to distribute to homeowners struggling to make their mortgage payments and keep up with other housing costs. States that applied for the money are getting ready to pass it out. If you're having trouble paying your mortgage and your debt is piling up, you may be eligible for some of the relief. The $1.9 trillion bill that President Biden signed in March provided nearly $10 billion of direct financial assistance to help homeowners pay not only their mortgages but also taxes, utilities, insurance, and HOA dues. Everybody, according to the National Council of State Housing Agencies.
Straight from the city. It's an offer we're digging into as part of our Rebound initiative. And as ABC 10 News reporter John Horn explains,
of San Diego and Chula Vista are offering loans of $25,000 to $95,000 at 3% interest, well below the typical 7 or 8%. And no interest accrues for the first 6 months.
This seems like something that would definitely benefit us, and then we can make the judgment on what we want to do in 6 months.
But unlike PPP...
Good news, many seniors and retirees may be eligible to receive additional financial assistance from the federal government this year. The lawmakers have confirmed the American people will be able to save hundreds, if not thousands of dollars in stimulus money and get additional refunds for their stimulus checks. So, Social Security is a big problem right now. It's in deep trouble because of many things going on in Congress. First of all, seniors on Social Security can expect to receive much larger checks this month, all thanks to the 2023 cost of living adjustment that officially takes effect. The average retiree will receive around $140 more per month. That's good, because thanks to the COLA, many experts were quick to point out that money may not go too far due to surging inflation. However, the most recent inflation data has promising news for those on Social Security. Like I said, it turns out your boost benefits might go farther than you think. Now, in 2022, seniors are burdened by inflation, we all know that, but the SSA calculated that COLA by tracking the third quarter consumer price index for the urban wage earners clerical workers refund. That's done by year to year. And what I mean by this, folks, is that based on the third quarter inflation data, seniors received a 5.9% COLA increase in 2022. However, inflation was still far beyond the 6% throughout the year, causing benefits to lose a substantial amount of money. So, throughout most of 2022, CPIW hovered around 8 to 9%, leading to an 8.7% COLA for 2023. And the good news is that since COLA was announced in October, inflation has slowed, everybody. And according to the Bureau of Labor Statistics, this is what it means. The CPIW increase was 7.1% in the 12 months ending November 2022. That's down 7% in October and 8% in September. So with that happening, in other words, inflation has slowed slightly over the past few months. Seniors are still receiving a larger than average boost in benefits. That means your check may actually go further than experts previously thought. And because of that, well, another bright spot for seniors is that considering how inflation has slowed over the past few months, it's promising news. So Medicare Part B costs have decreased, and also, besides that, typical these premiums are automatically deducted from your monthly benefit amount and are lower cost, so that can mean larger than expected checks just for you, folks. Just for you. Because however the average benefit amount, the SSA takes an average about of your earnings around 35 years of your career that you earned the most money from. So that number is then run through a complex formula to complex and account for inflation, and the result is your primary insurance amount. So, for instance, your primary insurance amount is the amount you'll receive if you begin to claim your full retirement age. The figure will depend on your birth year, but everyone's full retirement age will fall between the ages of 66 and 67. The earlier you begin claiming, the less you'll receive each and every month. And now, even if you meet all the other requirements from the Social Security benefits, well, if you filed at age 62, the most you could receive is around $2,600 per month for stimulus cash. So claiming at age 65, the maximum benefit increase, well, that's around $3,300. And at age 70, you'll be eligible for the full benefit amount of $4,500. In general, the higher your income, the more you qualify for in benefits.